Hi, I'm Jeff Banks from MW Lomax, and this is the Banks Report.
The Banks Report, a commentary by noted property and business tax consultant Jeff Banks. Jeff is not your ordinary accountant and speaks in words and terms that you understand.
In my practice, I help people who are working hard and using property and self-employment to help them reach their financial goals. Stock and its valuation for tax purposes is an area that causes all sorts of emotions for the business person. Firstly, it needs to be counted, and then it needs to be costed. But is that the end of it? No, not really, especially at this time of year where an inflated value of our stock can mean extra tax to pay. The ATO legislation allows for stock to be valued at the lower of cost or net realisable value. Cost is an easy concept, or is it? What is the cost of an item sitting in your store? Do you cost it at the last time it was purchased? Perhaps, if our stock moves on a first in, first out basis. But what if we have, because of ordering requirements, shipments across two distinct cost structures which may occur due to a price rise, or, for the importer, a change in exchange rate, or worse, the youngest stock goes out first because it's at the front of the bin. Valuing stock from this point of view is tricky and potentially complex, and just to throw a spanner in the works, I want to discuss deterioration and use-by dates. In a perfect world, stock lasts forever, but in the real world we have things like obsolescence, innovation and deterioration. Is my stock, because of any of these, worth less than what I paid for it, let alone what I can sell it for? If the answer to any of these questions means we have something less than we originally purchased, what now is it worth? This is where the concept of net realisable value comes to assist the business person. One could quite easily suggest if a product is approaching its use-by date, it is about, without sale, to be worthless and should be discarded from our stock take. If, however, other factors affecting our business are in play, what would be the fire sale value of our stock? That may very well be the net realisable value. It might be significantly less than the cost, but if we have the appropriate evidence, could be a strategy to reduce our taxation liability in the short term. Stock and its valuation are areas where, without full thought, can create unwarranted tax liabilities. A discussion with your client account manager may be appropriate at this time to ensure the best outcome for year end. For those who are not clients of MW Lomax and want this type of service when looking at year end, please contact us at strategy@mwlomax.com.au and we can commence a discussion with you.
The Banks Report is created by Jeff Banks of MW Lomax, a specialist financial services firm offering strategic advice and services you need in property and business, including accounting, taxation, finance, financial planning, risk insurance, superannuation, and business advisory.